the best of Money Matters.
Market View on Money FM 89.3.
That's right, you're tuning into Money FM 89.3. Time now for Market View, where we take you through how the Singapore stock market closed for the day, the biggest movers, sectors, and of course the companies to watch. But as usual, a quick recap of some key movements for the day. Singapore shares lower at about 2:20 p.m. Singapore time as investors digested more earnings from notable names, including Olam, ComfortDelGro and Sheng Siong. So the Straits Times Index was down 0.7% back then to 3,893 points, with a value turnover of 1.1 billion Sing dollars in the broader market. Now let's take you through how the STI closed for today. It ended in the red, down 0.65% at 3,895 points. When it comes down to numbers on the SGX, the value turnover we are looking at here is 2.43 billion Sing dollars. Gainers stroked losers 226 versus 379. Top advances for today, we've got here ST Engineering, Zhongmin Baihui and UOL. And in terms of top decliners, we've got here GMHUSD, DBS and UOB. Well, in terms of counters to watch, we have Olam, because the agribusiness giant today reported net profit of 38.4 million Sing dollars for the second half ended December, which is down 83.4% from the previous corresponding period. Now, elsewhere from Beijing, opposing U.S. President Donald Trump's latest threat to slap an extra 10% duty on Chinese imports. To ByteDance's TikTok investing $8.8 billion in data centers in Thailand over 5 years, we've got more international and corporate headlines in focus. And also on deck, more on the ongoing saga surrounding CDL, particularly what to note from a statement by its Group CEO Sherman Kwek out last night. Well, for more market moves and views, I'm joined on the line by Benjamin Goh, Head of Research and Investor Education at SIAS. Ben, welcome.
Hi, how are you?
Happy Friday, and a lot of things to watch, particularly when it comes down to CDL. But we'll start with the Singapore stock market more broadly to begin. How did the STI fare today, given that slew of earnings from your names like IHH Healthcare, Jardine Cycle and Carriage, Sheng Siong and Yanlord Land? Any of these counters stood out to you today, because some of them saw quite substantial movements in share prices?
Well, to be honest, today it looks like it's Chinese New Year again. I see a sea of red everywhere.
Yeah.
So almost all Asian markets are down, including Singapore. European markets have opened in for the last 2 hours or so. Again, they are down in early trading. And I suppose all these red color performances are in morbid solidarity with what happened in the U.S. markets last night. Say you listed a couple of names. Yes, they have issued earnings, but I think the notable name that I have in mind is not actually listed on the Singapore Stock Exchange. I am, of course, talking about NVIDIA, which released earnings yesterday morning, Singapore time, about 4 a.m., I believe. So yet again, it beat expectations, but it didn't beat expectations enough to satisfy naysayers. And that was the needle that broke the camel's back. So suddenly we are all now in a risk-off market. But if you think about it, right, this is not really a bad thing, because the equity markets, once in a while you need a breather to clear the way for the next leg. So it's not too bad. We've been, having very good, price advances in the last few sessions. So it could be time to take a breather and make way for the next uptrend.
Okay. Now, Ben, let's zoom in on Olam, because Olam reported a net profit of 38.4 million Sing dollars for second half ended December, down 83.4% from the previous corresponding period. And this despite an increase in revenue. I believe 24% was what we are looking at. What's behind the fall in earnings? How significant is this for investors? Because when the stock market opened, shares were down 11%. Tell us a bit more about that.
Well, this is a classic case where the trajectory in sales as well as costs are bifurcating. So although they may have sold more products, but the margins have, gone backwards simply because of higher costs. So the company has cited higher finance costs as well as prices of raw materials such as cocoa and coffee. Plus, they had also booked exceptional losses related to their U.S. businesses. I believe this is spices and almonds. So going forward, the company has also cited certain risk factors which we all know about. So those would be A, the geopolitical tensions, B, the U.S. trade policies, and of course C, the ongoing sluggish economic growth in China. All that is not going to change overnight. And the last thing I want to say is that Olam, just like Wilma that we talked about last week, right? They are in the commodities or in the agricultural business, which is very cyclical. So long as China says they are not, doing well, then you're going to have a negative sentiment in all kinds of commodity businesses, not just for agriculture, but you also have got things like steel, you've got things like pork belly, so on and so forth. So it's not, and really it's not helpful because they have issued not so good results today, where it is, as I mentioned, Chinese New Year, like everything is down, right? So of course they are being punished really badly.
And another counter to watch, Ben, is ComfortDelGro. It reported 12.9% year-on-year rise in earnings to 115.2 million Sing dollars for second half of FY 2024 ended December. How far are the numbers to your expectations? How did investors react to them, given it's a bit like a Chinese New Year for markets?
Okay, but ComfortDelGro is a name that all of us, especially dinosaurs like me, we know, right? So these are the taxis, right? So the company itself this time around really has reported really good stellar performance. And again, I like it because it's not just about beating the bottom line, but also the top line as well. So the top line was up 17% year on year. Again, company has cited it's mainly due to favorable foreign currency translation, as well as new acquisitions in overseas markets. We do have a bunch of analysts which are following this company, and from what I see in the reports, the analysts like what they see. There is a consensus target price of about $1.70, which really represents a potential upside for this stock of about 20%. What is also notable is that Maybank was especially impressed today and also upgraded its recommendation from hold to buy. So that's always good news. I think we also need to be kind of clear-eyed about what's happening with the company's, competitive advantage as well as the pressures it's facing. As you already know, the Singapore taxi and private hire competition in Singapore is going to, expected to intensify further. But the company has also stated that its revenue for the Singapore rail operations are expected to increase marginally. And also its renewal for London public bus contracts should also see improved margins. So again, let's be honest, ComfortDelGro is not Tesla or Bitcoin. It's going to be slow and steady, but it's a name that all of us know, understand, and the business model is pretty straightforward. So, I think that's all good.
You talked about crypto, some significant movements relating to crypto as well of late. But, from ComfortDelGro, let's continue to set our sights on City Developments Limited, or CDL, because its Group CEO Sherman Kwek said in a statement out last night that the quote-unquote primary reason for the ongoing dispute at City Developments Limited is, again, quote-unquote, a very serious issue of corporate governance involving Kwek Ling Beng's advisor, Dr. Catherine Wu. How would you read into this, and where does SIAS stand on this? How much of an impact will the ongoing saga really have for CDL's investors?
Sure. Well, I think the allegations from both sides are coming in really fast and furious. But I think we need to be careful here because we don't actually know the facts, right? So the situation here, or rather the nature of the situation is very, very fluid. So every day we're going to hear something else. So there has been, I believe, a court case where they have, or some of the independent directors as well as the CEO has pledged to not do certain things. But it doesn't really give us a lot of transparency as to what actually happened.
Yeah.
Okay, so let's zoom out a little bit, right? So that said, you do have unexpected changes in the board composition. That is not uncommon, and there are really a lot of examples from the US as well as Europe. It's just that in Singapore, we are a little bit more collegial, I suppose, and that doesn't really happen. But this is not it's not something that has never happened before. So the stand that SIAS has and always had is that the changes in the board of directors for any company is actually fine, so long as the proper processes are followed, right? So as long as the governance, as well as the governance framework and the integrity of the system is not violated in any way, then it's completely fine because changes in leadership is normal, right? Okay, so that said, and speaking on behalf of SIAS, we would also like to encourage all listed companies to consider the interests of the greater investing public as well as minority shareholders, since after all they are also owners of the company. Now, coming back to your last question about the impact on investors, the short answer is that we don't know because the stock has been suspended since Wednesday, I think. So investors, whether you have got the fanboys or the naysayers, we are not able to express our views in the market, so there are no prices. That said, the analysts have put in some reports. Both UOB Kay Hian as well as JP Morgan have downgraded the company to neutral. And again, but to be fair, you have DBS Bank, CGS as well as Citi also have got buy calls. So I would say that it is probably best for all that the issue is resolved in as transparent a manner as possible, and let's lift the suspension, and then investors can express their views in the stock market.
Okay. Now, if you're just tuning in, we're in conversation with Benjamin Goh, Head of Research and Investor Education at SIAS. Well, across the region, Ben, Beijing said today that it opposed U.S. President Donald Trump's latest threat to slap an extra 10% tariff on Chinese imports. Now, Trump said his proposed 25% on tariffs on Mexican and Canadian goods as well will take effect on Tuesday, along with the extra 10% duty on Chinese imports. So the fresh tariffs are in addition to that 10% tariff levied back in February. The timing of that is quite worthy of note because it coincides with the start of China's annual parliamentary meetings on Wednesday as well. So what do you make of this, and how much of a dampener will the news be for Chinese equities given the recent positive sentiment around Chinese tech firms?
Sure. I think it's pretty much a certainty that any kind of additional tariffs, and this is the extra on top of the extra that was put in before Joe Biden left office, right? So the additional tariffs and the whole framework, any kind of tariffs on the Chinese export is going to be a drag on Chinese equities. So if you recall a couple of days ago when the Trump 2.0 declared that they're going to be looking at further tightening of NVIDIA chips into China, Alibaba dropped about 10%. I believe that was under the ADR, or the American Depository Receipts in the US. So there's definitely a knock-on effect. And the reason for that is that the main narrative for China tech right now is that the AI models, or rather their AI models, can compete with the best that the US has to offer. As you can see from what DeepSeek managed to demonstrate back in January. So if the US starts choking off the supply of NVIDIA chips needed to train future generations of AI models, then of course this key growth area in China tech is going to be handicapped. But again, necessity is the mother of invention, and China as a country has been around longer than the French have been French. They were Gauls before. So China is going to go all in on homegrown semiconductor manufacturing. We've already seen early fruits of that. Obviously, at this point in time, they cannot compete with the likes of the best chips coming out of NVIDIA, but they are making progress. So it is quite plausible that at some point in the future, Chinese tech will no longer be beholden to trade policies decided in the U.S.
And in the meantime, Ben, let's take a look at some corporate news. ByteDance's TikTok said it'll invest $8.8 billion in data centers in Thailand over 5 years. Details, I believe, still scanned at this point. Any initial thoughts, especially given, again, the timing as well, because there's a news report out saying that Meta is planning to debut a standalone Meta AI app to join Facebook and Instagram. That'll be out likely second quarter. Any thoughts as well?
Okay, so the two pieces of news are both in the realm of data centers as well as AI, but they're slightly different. So first off, for TikTok, they're making investments outside China is probably pretty smart because it solves a few of the issues. One of them is that, obviously, globally speaking, there's a lot of regulatory scrutiny about how TikTok's operations are separated from the other platforms that are owned by ByteDance, especially in China. So by having a new server centers outside of China, that kind of alleviates that kind of worry. And of course, moreover, in a lot of Asian countries, Southeast Asian countries, including Singapore, all of us are trying to compete to build data centers or to hold data centers by giving tax rebates and very friendly terms. Because in order to build a credible AI ecosystem, you want to start with the infrastructure. So with the infrastructure in place, then of course you have a team of engineers, and then they're going to start working on new AI models in the country. So it really makes a lot of sense for Thailand to kind of roll out the welcome mat to TikTok. So Meta is slightly different. So their new app is going to be an AI app. Can't really tell whether they're going to be using one of the open source foundational models such as Llama or something else. I need to take a look at that. But this piece of news actually sits in a different spot on the AI value chain. So we're not talking about data centers or hardware or infrastructure. We are talking about an app that is designed for people who are using their phones, so it's more of the everyday person, but runs off the GPU clusters housed in data centers. Now, overall, this is, of course, positive news for Meta, and in a way, they are, again, trying to keep up in the race because all other big tech firms are also planning to or have already launched their own AI app. And, of course, having an app on the phone is much more convenient and accessible than, trying to use ChatGPT or Llama via a traditional website. So it makes a lot of sense for them.
And also a quick one before we let you go, Ben. We've got the latest US PCE price index numbers due tonight. That's the Fed's preferred inflation gauge. What are you expecting on this front?
Well, looking at the reports out there, the consensus is that inflation is probably going to rise or probably have rose 0.3% in January, and that represents a 2.5% year-on-year inflation. So that is actually a slight moderation from December's reading because December had a 2.6% year-on-year reading. Okay, so if the estimates turn out to be accurate, then the good news is that annual inflation is not accelerating. The bad news is that obviously inflation is still elevated and is sticky and is not coming down as quickly as everybody would like. So, of course, the elephant in the room is that what is Jerome Powell going to do? So what does this mean for interest rates, right?
Yeah.
Well, the betting pool, and of course I use this word loosely, the betting pool, right, is that the Fed is unlikely to cut interest rates until at least June. So they have a meeting in March, in May, and in June. So it is probably going to be June or later where, there's any kind of probability that the Fed is going to cut interest rates. So the current mantra of higher for longer is still holding.
Okay, higher for longer. Thanks so much for the insights, Ben. That was Benjamin Goh, Head of Research and Investor Education at SIAS. Thank you so much for joining us on Money FM 89.3.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance.